now joined by Jairam P. Sampath, who is the whole-time director and CFO at Kaynes Technologies. Mr. Sampath, a very good afternoon to you. Thanks so much for joining in. I'm reminiscent of our conversation we just had very recently post Q4 earnings, a very strong year for the company. There have been a few things that have been new developments for you as well as for the industry. So let me just start off with that first, and then I'll come back to the continuing the conversation from Q4. In this quarter, we've largely seen very strong performance from you, but and a fundraise and QIP as well of 1,600 crore that you have announced. Specifically though, post that we've seen some selling from the promoter. To address, if you can just address that question first, is that largely to invest in some new verticals for the company, or is it in personal capacity that the promoter has taken money off the table?
Good afternoon, Puneet, and good afternoon to all the viewers. So the small block sale that promoter had done, this has been on the anvil for a long time. Actually, it's one of his ambitions to create a Kaynes Center, which will be part education and part technology and science and technology related venture right here in Mysore, which is our head office. So it takes some time for it to kind of become reality, right? So we've started working on this, and then hopefully 3-4 years time frame, this will become a reality. This will add reputation to the company, and also we didn't have these kind of symbolisms earlier, but this also will help in developing the aspirations, technology aspirations of people nearby. And so we want to do a lot of things, and you will get to know once we have the plan implemented. So yeah, and the other question was about how the business is pretty good. I think we have a strong order book, and the order inflow is also increasing. And so we probably this year we have guided for a good growth. The total consolidated, including the acquired company, about 4,525 crores is the guidance we have given. And without the acquired company, which is the August Electronics of Canada, we do about 4,350 crores. We have also, I think, increased our guidance on profitability. So we probably hit 15.6% EBITDA this year. Because most of the orders are probably visible to us, and then we can make a fair bit of estimation.
So Mr. Sampath, just one follow-up. Largely, whatever has been sold currently in this particular small block, all of that money will go for Kaynes, the tech center. Is that correct?
Yes, that's the plan.
And largely, if you can just talk a little bit on the objective as well, is that to support Kaynes as well as going forward new technologies that will come in? Will that be coming through this new venture specifically?
No, this is more as part professional, part social venture. See, what happens is many companies set up large entities in areas, but the local people have no access to any development and so on. So, so this is our effort and our contribution to the Mysore region, so that people can come and look at it. We would showcase lots of technologies and so on, as we believe that symbolically the fight for future will be on technology. So we want people to refocus on technology as a means and, let's say, weapon for winning in the future. So that's the whole idea. And we've been talking about it for some time now. We didn't have the resources and the time. So, and we have to start at some point in time, and no harm in doing it now, because within 3-4 years time frame, we would have that come in and hopefully coincide along with our $1 billion revenue achievement, and maybe a larger achievement thereafter.
And Mr. Sampath, largely on, which we spoke about earlier a little bit, that the fundraise also is, and that's why I think the timing and the question essentially of promoter selling at that time, the fundraise largely, is it more in terms of securing the future rather than reaching that $1 billion mark by FY28? Because when we spoke last after Q4, you mentioned that 60% growth for this year is already penciled in, and you already have the orders. You're expecting roughly 4,500 crores of revenue in FY26. So largely, are you already funded enough to reach that $1 billion target? And is this fundraise largely to secure the next billion, to say the least?
Yeah, I think you got it right, Puneet. Fundamentally, this is for the next billion. As you know, the first billion took about 40 years to come in. And And it's yet to come in, but I think we are pretty sure we'll probably exceed that by FY28. We are planning the next billion in revenues within FY30. So when you have such steep quantum of growth, even though there could be potential markets and there could be possibilities of doing this, we just wanted to ensure that we don't falter on that number, because it's very critical towards our goal of becoming globally meaningfully large company. So we think that beyond 1 billion, you must showcase growth for at least one more decade with extraordinary growth rates. No? So in order to do that, continue, say, FY28 onwards, we'll add another 1 billion by FY30. So some portion of it has to come from new beachheads or new sources of demand. And these sources of demand, we don't have 40 years to develop a company, right? So we have taken the inorganic route, but we are cautious to only acquire those companies where there is complementarity and synergy. By complementarity, I mean that they are in a business that we don't have with us. They serve markets and customers that we don't serve today. So in some sense, augmentative. And in synergy, the synergistic point that we want to do is both put together, the profitability should be higher individually as well as consolidated. And that is done by taking supply chain benefits and common customer benefits and so on, you know. So our idea is that as we develop this geography expansion drive, at least $200 million plus revenue should come from these newer ventures.
So,
And
Mr. Sampath, I'll button
right.
over here. This is Hiral on this side. $2 billion in terms of revenue is what you're talking about by FY30. Taking
Correct.
that into consideration, let's talk about two businesses. One is semiconductors and the other is the smart meter business. You have a potential strong target of almost, I think, if I'm not mistaken, 5.5 to 6 million chips by FY30. And the smart meter business is also something which is looking pretty strong. How much will both these businesses contribute if to achieve that $2 billion mark?
Yeah, thank you, Rizia. I just like to restate what you've said. So FY28 onwards, we have three streams of business. One is our existing EMS business, which contains smart meter and many other things. And then there is semiconductor business, and there is a PC board fabrication business. So originally we had conceived that we will reach about 7,000 crores of EMS business by FY28, and then remaining 1,500 crores odd will come, 1,000 from the OSAT assembly and the 500 from PC board fabrication. So maybe these numbers will happen a little earlier at a different time frame. So at FY30, if you see, we are thinking that, assuming some number like 85 rupees to a dollar, so we probably about 17,000 crores what we need to do. And in this 17,000 crores, the share of business of the new businesses, which is OSAT and PC board assembly, will be about 5,000 crores, wherein the total, let's say, total CAPEX that we are flowing in is about 4,800 crores. So 5,000 crore will come from PC board and OSAT, out of which OSAT is expected to be around 3,500 or so, and then 1,500 will probably come from PC board. So the remaining 13,000 crores has to come from the EMS business. While the demand in India and India geography is strong enough and it can probably sustain it, but we just want to make sure that we are not found wanting at that point in time, falling short by a small whisker or something. So we want to make sure that we have additional geographies in place, because what happens after FY30? Again, the similar growth rate, we may need to add $1 billion to our sales number if you want to grow at 50%. Maybe lower percentage may happen, but significant amount of businesses have to be added. So we need to have other beachheads or other sources of sales running. So that is the attempt right now for our QIP. We want to raise funds so that we can invest into these businesses, which is adding geographies. Primary among them is North America. Then, of course, we are looking keenly at Europe and South Asia geography too. But that will be second step. First step will be to secure our organization and our initiative in North America going. We have two companies now, one in US and one in Canada. And hopefully we'll add one more post QIP so that we have a critical mass. This can be taken to about $200 to $300 million worth of business by FY30. So out of 13,000 crores, which is expected from the existing businesses, we probably about 2,400 crores should come from North America geography. Then that makes the job of Indian geography somewhat more reasonable, because we also know that if you give high targets on the sales side, your margins can come under pressure. So it's very important for us to make sure that we have a balanced growth rate expectation as well as profitability performance.
One question I have is, I'm reiterating, so the 1600 crore QIP, will that be enough to meet that $2 billion mark by FY30? That's number one. And number two, you're talking about the margins that could probably temporarily come in under pressure. So what's that range we should be looking at in the short to medium term? And then in the long term, where will it go back to?
Yeah, so the 1600 crores, as of the tactical planning that we have done, I think it should be sufficient for us to take the numbers up to $2 billion, and also make sure that we add a bit of profitability too, maybe 100 basis points more than what we are today. So you may not see the profitability coming under pressure, but we are just wanting to make sure that it doesn't come under pressure. So one is to add geography. We are also looking at acquisition of some companies in the ODM space with the same QIP. So we take it in small steps, digestible steps, steps which we can, company of our size and our ambition and our work area can actually absorb. And so that's why we have carefully crafted this 1600 crores to fund for geography expansion on one side, ODM companies, again, inorganic acquisition, some specific technologies, etc. Plus, we have, of course, an ambition to increase the technological footprint in the manufacturing itself. So these three put together, we think by FY30, we should probably add 100 basis points to our profitability too, because ODM offers us opportunity, and other geographies too offer opportunity to have a, let's say, increase in the profitability.
Mr. Sampath, just wanted to get into a little bit on the vertical side as well, because one of the key growth areas, I think a couple of them are smart meters. The other one is railways, which a lot of it is currently with Sensonic, which we had acquired, is also helping. On the smart meter side, what was the revenue essentially in FY26 that you're targeting, and what is the current ramp up of the new facility that you had in South India? Will that be the growth story over the next 2-3 years, the ramping up of that? Because the orders you already had some, how is the timeline on execution side as well?
Sure. So last year, approximate numbers between 400 to 500 crores of smart meter was shipped out and being installed, etc. This year, we'd probably do it twice as much. In terms of order book, there is adequate coverage for 1.5 to 2 years time frame. And as we said, we're targeting something like a 15% of the total market for smart meters, which is driven by the government's program for implementation of smart meters in 250 million homes. So from that perspective, I think for the next several years, smart meter will dominate, but the other customers and other segments will also increase. So maybe in FY26, you will see, let's say, a larger than life portion of smart meters, but then FY27 onwards, it will again get back to the regular, let's say, composition of sale, when other segments, they also start growing and posting bigger numbers. So you always see every year there is one vertical or one customer or one type of product which takes, let's say, attention from us. But in the overall situation, we are a diversified company. So if you take FY28, for instance, which is about 4 years, roughly 4 years, 3 years now. So smart meter number will be similar to what we do this year, maybe tad more, maybe 20-30% more, because smart meter has got a capacity consideration, and also we don't want to overdo, in a few years time frame, what needs to be done over, let's say, 4 to 5 years time. Of course, there will be pressures from the customers for delivery, etc. But I think it will even out, and the smart meter story will be a strong story for at least 5 years from today. And every year we'll probably start increasing the number a little bit. But the other businesses will also increase commensurately and probably even more. So you will start seeing the percentage of business that we do in smart meters as a total percentage may shrink a little bit.
Right.
But despite having growth, yeah.
Right. Mr. Sampath, a quick question in terms of the rare earth mineral unavailability, which is doing the rounds right now on the back of China curbing exports. In any way, does that impact a company like yours or any of the other players in the industry? Is there any usage?
Yeah, so these are used in motors which are used in electric vehicles. So electric vehicles, significant portion of our business for sure. And but what we understand is that supply chain managers at these places would have stocked up a little bit. And that time, in our opinion or assessment, is sufficient for the countries involved to iron out the differences or maybe alternate technologies to come in. So while there is a scare now that if they suddenly stop all uh, mm, these materials to come in, and then motor production will get affected, and then of course the vehicle production will get affected.
So,
But
Mr.
this is at a
Sampath,
scare level.
Mr. Sampath, my question to you is currently, you're saying
Yeah.
from what everyone's hearing, it's a scare, but you're not seeing any impact in terms of unavailability, in terms of business that Kaynes has, where you have to procure. And secondly, if there is an impact, is there an impact on pricing? Where are you seeing that? Or would you say it's just status quo, where you've not heard anything from your suppliers or at any extent where, you would have to stock up or anything?
Yeah, so we do have privileged information I can't share, but suffice it to say that the supply chain manager, these companies have also probably been expecting this a little bit ever since the uh, tariff war of words, more to say, broke out between the two major consumers of electronics. One is US and the other is China. So I think it will not have huge impact on our portfolio for sure because we are a diversified company. If we were doing only EV related products, then we would worry more because then things can take a turn for the bad, and then that can affect us. But since we are present in 6 verticals and the order book, the quantum of orders in the order book from the EV segment is not abnormally large. So we could probably do some other work too. So from our perspective, this is a temporary scare and perhaps going forward it will get resolved, and I think supply chain is stocked enough to let's say take care of these small delays, so that's maybe a tad optimistic, but I think that's what will pan out.
I think that's something we should watch out for. Thank you, Mr. Sampath, so much for joining us on the show and sharing the view. So that's the management of Kaynes Technologies.